Good afternoon. This is Trading with Teddy, July 21st. I want to put a couple of props out to Peter Brandt. He is a legendary trader, one of the very few people that I follow, really close with regards to kind of market psychology and technical indicators and different things to look for. There's a lot of good sources of information out there. You got to be careful on, looking at John2 at hotmail.com on the Twitter. You want to make sure these people are credible, reliable, and have been around for a long time. And Peter Brandt is certainly one of those guys. And with regards to the gold and silver market, it's really interesting what he pointed out. I've been bullish, for a while on all these pullbacks, gold and silver alike. However, yesterday he did point out, some of the components that you can make for the bear case. And these are the components we've been talking about, for a while, but I think it's always important to stress and highlight, exactly, what these are and what's in play, because when sentiment is so bullish, I get nervous, and that's the key component, or one of the three key components. Sentiment is historically bullish. We've got the historically wide commitment of traders, with commercials I think they're nearing close to 250, 300,000 short contracts, regardless. You can see it on a chart. It is stretched out miles wide. And in addition, the stock market is not backing off. It continues to rally. So, those three components together, I think it's got to make you think twice, or at least be a little bit cautious before entering into the bull side. So how do you combat that? For me, as a bull, and I'm looking at these, different things coming ahead. The market's strong. The tape is strong. It's bouncing off and reacting to bad news, or theoretically bearish news for the gold market, really nicely. So what we specifically are looking at, we're looking at like the October 1400, 1450 call spreads. Okay, they're running about $700. The reason I really like looking at these spreads is it's going to give you some margin for error by virtue of selling the 1450 call. That call's taken in roughly about $700, $750. So in the meantime, over the course of the next couple of months, if we see, well, for one, volatility dry up a little bit, and then two, gold pull back significantly based on these three components that I was highlighting earlier. This is a time, where I would view, that's where I view the 1450 call is some downside protection, the short. So any kind of pullback, so like I said, you could sell this thing for about $700. We see gold pull back, you could cover it up for $200, $250, at some point down the road between now and the October expiration, and that'll leave yourself naked long the $1,400 call. Which then theoretically gives you the unlimited upside profit potential. So this is a conservative strategy. It's a strategy that I love in a situation like this, considering that the market looks a little bit dicey. You don't want to dive in totally head first, after a big lot of futures or outright naked calls. Selling that 1450 can do wonders, in terms of a little bit of built-in short-term downside protection. So this is something that we're looking at. We love this idea. It gives you plenty of flexibility in the trade. So that's what we got for today. These are my thoughts and not those of ADM Investor Services or Archer Financial Services. Thank you.